Hello, everybody, and welcome to today's webinar. My name is Daniel Wynn, and today we're going to speak about how you can use our funds to broker loans and maybe possibly we can be joint venture partners in deals in Chicagoland area, meaning Chicago and all the suburbs and surrounding counties. We've closed a lot of deals in all the counties over the last few years, and we're looking for partners and people that are motivated, that know how to find deals and just don't have the money. Or you have the money, but you don't have all the money, or you have the money and you're not sure how to put the deal together. We would like to bring our experience and expertise, offer that to you, and we can both make money together. And there are three ways I'm going to go over how we make money together potentially. Right? We are a private lending company. We've been doing this in Chicagoland here for over 30 years, and we fund non-owner occupied, primarily non-owner occupied business purpose loans, right? So we make loans to real estate investors, typically that are flipping properties, or they own properties and they want to pull cash out to go start another investment, or they own properties free and clear or with low debt. They don't have good credit scores, so they're not bankable. So they come to us and we lend them the money so they can go fulfill their business purpose dreams, right? So that's number one. Number two, some people that we speak to just don't want to deal with properties anymore. In that case, what we're doing is we're buying the properties, right? Some people, it's just walking away money, meaning they're like, yeah, just, I'd like to get as much as I can, But for us, we have to buy right so we could sell right and make a profit, because you make your money when you buy, not when you sell. So we will buy properties all throughout. We bought in all the counties in Chicago, including Winnebago, Kane, Lake, and of course Cook County, the primarily county. And lastly, we do joint ventures with people. And the joint ventures is really pretty powerful because it allows us to put up, all the money, and then we do some sort of equity split with the property owner, and if you bring us the deal, and with you also. So let's start this. What's the state of the economy? Well, Illinois just passed one of the largest tax increases in history, right? I mean, Illinois politics, so I won't dive into that. We'll talk about globally, like across the United States, or, across the United States. Interest rates are they're like at a 10-year high. So the last 2 years, interest rates on 30-year mortgages are 6, 7, and sometimes 8%. Hard money loans are, of course, above that by 300 to 500 basis points, or 3 to 5%. And because of this, housing sales is slowing down, right? Because interest rates are high, people that took out all those 3% loans, they don't want to pay them off, right? Like, they don't want to sell their house, get rid of a 3% loan, go buy a house and get a 6 or a 7% loan. So a lot of people are staying put. They're delaying selling their property. If they thought they were going to sell it this year, what the hell? Maybe they'll wait till the next year or the year after, and hopefully things will be better for them so they can get the price that they want to get for their property. Also, we got AI now, ChatGPT, Gemini. All of these are creating potential job losses for people in certain industries. They're creating layoffs, and that may or may not affect you, right? I mean, if you're a Uber driver or a truck driver, it's not going to affect you immediately, but they got robots that they're training to do these jobs in the near future. So it's something we have to be thinking about, today, to be prepared for tomorrow. As I said, housing prices are slowing, and because of these layoffs and job losses, people are having a tough time making their payments, right? Paying their bills, paying their taxes, and paying their mortgages. And this is kind of a market, right? It's not like we're taking advantage of them. We're offering solutions for people that are part of this situation. So why are we sharing our capital and our access to capital with you? Simple, right? You're on the street, you're in neighborhoods, I'm here in my office. So I'm looking to partner with motivated people that know how to find deals. Okay, so we did a survey about a year ago, and we did like a 10 or 12 question survey, and we asked the people that we email to all the time to fill out the survey and tell us how we could serve them better, right? And one of the things that people said is like, hey, I know how to find deals, but we lack the money to execute on those. Well, we're a lender, right? We want to put money to use. So what we did was we came up with some rules that I'm going to share with you of how we could work together. So it also said in the survey that the people that were answering it were always looking for more income opportunities, how to flip properties, get more cash flow, and build financial security and equity for them and their families. So here are the private capital rules for instant loan approvals. So we get loan requests all the time, and you can imagine we get people that call for personal loans, which we don't do. We get people that come a lot of commercial deals, land deals, rural deals, out-of-state deals. But let's talk about Cook County and the surrounding suburbs. In that area, we're basically looking to do 1 to 4 units, like I said, condominiums, townhomes. And we have 2 buckets we can put those in. We have the in-house money, which is our money, and we do not exceed 50% loan to value. Yes, there's some exceptions, but we have to keep our loan to value low because if things go poorly, we don't have the government to bail us out and get our money back. So in this example that we have here, if somebody owes $70,000 on a $200,000 property, that's currently 35% loan to value. The maximum loan we would do would be $100,000. Now you might say, well, that doesn't sound like a lot. That person might have a 500 credit score, right? And they might have a 700 credit score. If they have a 700 credit score, maybe we'll do 60% and we'll do $110,000 or $120,000. But that's the general box. If we keep it under 50% loan to value, and it's not owner occupied, that is an instant approval. We will put a term sheet together and get it to you on the same day. If you're going to send us deals, we should be able to see it online by typing into Google and seeing Zillow or Google Maps. Or if you've been out to the property and you have pictures of the inside which are not shown online, then share those with us because we love seeing the pictures. A picture is worth 1,000 words, and we don't want to waste our time and your time for deals that we're never going to fund, right? We're looking to buy. Like I said earlier, we believe you make money when you buy, not when you sell. So we all get deals, or I should say a lot of us get deals in our email, like wholesalers trying to sell properties. If you're online on Facebook or stuff, there's people trying to sell properties. And a lot of these deals don't have a lot of margin in them. You see this ugly property on an ugly block and they're trying to get $200,000 for it. Well, that's not my business model. That's their business model. And our business model, if we work together and when we work together, is that we're going to be able to look at the property, see its as-is value, see its after repair value, and know the maximum that we could either lend or buy it for. And we have to have a minimum profit target on buying of $25,000. As you know, when you buy, there's a lot of closing costs. You got taxes, title, water prorations, tax prorations, legal fees. So there's a lot of fees that go into this. So you have to have the right amount of margin. And 25 is our minimum. Obviously, we would all like to make more than that. Let's go over our rules for joint ventures. So joint ventures, and I'm going to go over what we don't do in another slide, but joint ventures that we're looking for are, once again, single-family properties. Typically, these properties are in distress, meaning they're in foreclosure, probate, divorce, delinquent property taxes. And when they're in this distress situation, they have to deal with this, like to buy out their partner. They have to pay off the mortgage company. And when you get those deals, if they just bought the property with an FHA loan 2 or 3 years ago, there's probably not enough equity to do the deal, right? But because Chicago has an old housing stock and a lot of people have owned properties over the years, there's plenty of good deals. So we have to just wait for the right pitch or fish, or whichever way you want to look at it. I'm willing to be patient and wait for the right deal, and so should you. So we're looking for the deals that are typically, once again, under 50% loan to value. So we know that if we buy it, help them move out, help them get all the things that need to get out of the property, and then be able to sell it and let the next guy, girl, person make the money rehabbing it, right? We are not a rehab company. If you have, we fund rehab loans, so we're going to fund those rehabbers. But when we buy these joint venture deals together, when you're using our money, we're not looking to do rehab. We'll fix a broken window, a broken door, some plumbing thing that, in order to sell it so it shows well. But we are not looking for, to buy a property for 100, put 200 into it and sell it for 400. Okay. So sometimes people just want walking away money. So we're going to be there with you. If you bring these deals to us, we'll get on the phone. My team and myself will get on the phone and we'll talk to these people and we'll help you close the deal. Some of the tools that we use, what's great about in Illinois, Cook County, is that they have this Cook County Property Info website, which has links to their taxes, the deeds, the title. You can pull your own title reports in Cook County, right? Through this website, cookcountypropertyinfo.com, you can link onto the county recorder's office and look at the debt that's on there, mortgages, liens, city of Chicago liens, all that stuff. $10 million in fundings can be at your fingertips. So I talked about our in-house money, right? So our in-house money, we've been lending in Illinois for well over 10 years. We have funded over 600 transactions, right? Our broker partners, we have some publicly traded companies that we have long-standing relationships, many years, that will fund some commercial deals, right? They still want to be at 50% loan to value, maybe 60, and they will fund the $500,000 gut rehabs, the big rehab projects that we won't take in our own portfolio. So we have two buckets. We have the in-house bucket, a little bit very conservative, all credit, and then we have this commercial multi-billion-dollar company that is listed on Wall Street that we've had this long-standing relationship. So when you bring us these deals, we can fund it in-house or broker, which means we would co-broker the deal together and you would leverage our relationships. Okay, so we're looking for real estate investors like you to bring us some deals. We will do the three things we talked about. We'll fund the deals, we'll buy them, and we'll joint venture. You don't have to have good credit. You don't have to use your credit or income. The one thing that I'm really amazed at is that as I've been in this business over 30 years, is so many people my age and younger than me still believe that the only way to make money in real estate is to buy a property, fix it up, and sell it. Buy a property, build a rental portfolio, take on debt, take on the responsibility. Those work, and if you're doing those, God bless you. No disrespect. I know it's hard work, it's honest work, and I hope you make all the money in the world. But I'm sharing with you another way where we don't have to have rentals and we don't have to do rehabs, but we could still make money together. And that's what I'm sharing with you. So you don't need to use your credit, don't need to use your income, and we're giving you the power to close these deals using our money. So we want to leverage the simple reason to answer your question, why do we want to work with you? We want to leverage our money with your time and talents. Okay, let's go over the deals that we don't fund. Most commercial, I say most commercial because a lot of times you get commercial deals that are, funeral homes or in Rockford or, I sold a storage facility in Rockford. I couldn't believe it. We made a lot of money. But like I said, it's deal by deal for commercial, but we do have this big Wall Street lender that will do the commercial. And I funded a recent commercial deal. Why? Because it was at 15% loan to value. If you keep the loan to values low, we're always going to typically have a solution. Most land deals, never say never, I've funded some land deals, but once again, because they were really low loan to values. Massive rehab projects, even my Wall Street lenders will say if the guy buys a property for 100 and wants to rehab it for 300 because it's going to be worth 400 or 500, they don't really like those deals, right? They would like it that you bought it for 200, your maximum budget is 150. They like that kind of ratio. We don't do properties with no equity, right? We're not here to do loan modifications and try to negotiate with the lenders to take less, and we don't do ground up construction. So let's get started making money. I want to thank you for joining us today. Here's our phone number. If you want to give us a call, You got our emails. Give me and my team a call. Like I said, we'd like to find out what kind of time you have available, any deals you have to look at. If it's not for you, refer this to your friends. Maybe you got people that are looking for somebody like us. We'll send a replay out in a couple of days of this. And let's see if you have any questions that I can answer now.